What is going on, guys? Bexio back, and today we got a brand new video with Plug Power making moves, and we are at peak fear in the entire market, so might be a good time to start loading up on some stuff. But before we get into that, if you're not subscribed, make sure to smash that sub button because we're on the road to 1,000 subscribers. But we can look at Plug Power's chart right here, showing that we are at a red day today, a little bit of a downturn, and tried to get back into this channel here, but just couldn't get a close above it here. This is the weekly. We could get a daily close, 1 and 2, not a full candle though, but a little bit of a downturn here, kind of heading back down to this $19 mark. But if you look on the left, everything is red except for AMD and crypto. So, a lot of fear in the market, a lot of uncertainty. When that is here, everything just goes down and volatility skyrockets. So, to be expected, these kinds of moves here. But Plug not doing too bad. I mean, 6% down in the day, not great. I mean, even Apple down almost 2%. That is ridiculous numbers here. So we will be looking at this, but nothing really going on of too much interest. You can see Plug's at $20.90 after hours, so pushed up a little bit, going back to that $21 mark, trying to get there. And but right now we are looking at something that could be peak fear with the Plug, and all these small caps obviously got hit hard. Plug's not really a super small cap, but it's a smaller company, and they got hit really hard. And then everything else got hit hard as well. But right now we have the big uncertainty. We have the geopolitical things and Russia, Ukraine, all that stuff hitting really hard right now, as well as even the issues of inflation. So those things out of the market's control. No one can really say what's going to happen there, and a lot of confusion about all of that, which is so much uncertainty, and the market hates uncertainty. But Plug did make a move recently to acquire these guys right here, Joel Processing, and they entered a strategic collaboration with Atlas Copco Gas and Process and Fives, that's a mouthful, to expand offers for global hydrogen liquefaction market. So this is big news. Obviously, another partnership, and they went out and acquired another company. This is why we were talking about their balance sheet and their cash on hand, their ability to withstand all these interest rate hikes and expand their business. So they went out, they acquired a company, and the cash that they have allows them to do that. And this right here, why they acquired the company, is to develop hydrogen liquefaction plants. And then liquefying hydrogen makes it easier to transport, leading to significant cost savings and broader disruption coverage. So just expanding Plug's global network, their hydrogen network, continuing to grow it, put in the infrastructure, and save money while they're doing it on transportation stuff, looking longer term stuff. So these are things that might not matter today, but they'll compound to really mattering in a few years. You see Joule, they got them because they have a proven cryogenic process that Joel developed for the gas processing industry, is directly applicable to hydrogen liquefaction and has the potential to reduce the cost of liquefied hydrogen by 25%. So right there, reducing costs by 25%. That means more money to go for Plug. They can try and become profitable sooner. They can make more revenue. They can start actually accelerating here, trying to get to that profitability point. And we all know that is what we are waiting for with Plug, is them to finally become profitable. This right here, this acquisition represents a capital expenditure savings of about $200 million for Plug over the next 4 years by bringing hydrogen liquefaction capabilities in-house. So they are going to be doing it in-house. Obviously, that was one of the bigger problems Plug had in the past, was they were not doing things themselves. They were relying on third parties to produce hydrogen and do this kinds of stuff. And that ultimately led to very tough times with people charging more, shutting down, not delivering, and they decided to finally just do it in-house, which they've been building out for the last year and a half or 2 years at this point, and we're starting to see it this year go into effect and start producing hydrogen. So we'll see how their network starts to go, and this acquisition lets them finally get into a different kind of way of saving money for transport. Now they can liquefy hydrogen. They could figure out how to use liquefied hydrogen and just kind of use it as gas. And it's going to start with things that aren't regular cars. It's going to be like, heavy duty things, airplanes, heavy trucks and stuff, and shipping. But this is just the first step to just continue growing their market and growing their company. And as for the acquisition, it was $160 million, $30 million up front, $130 million in the future, based on meeting liquefier efficiency and third-party sales and gross margin targets. So ultimately, this acquisition, not that much money for them. $30 million they paid today, and they get to keep the other $130 million to make sure that the execution is good and they can actually execute on their what they're saying. And then there's still not that much money for them. $160 million all in total is nothing compared to their $3 billion, $4 billion cash on hand budget. So this good acquisition for them pushes forward their company, is good looking long term, and allows for Plug to not just throw a ton of money. It wasn't a ridiculous sum of money to acquire this, so they can still easily withstand interest rate hikes and all of that kind of short-term fear and problems. And the Plug CEO was talking, and he talked about this acquisition, obviously, and said, and we have the complete delivery network in place. Liquefier system is key to offering hydrogen in liquid form, which is ideal because of its superior energy density versus gas hydrogen, lower transportation costs, and potential for powering trains, ships, and airplanes. So that grows their market even more. They can go into trains, ships, airplanes, start there, and then kind of go into the normal car market and see if they can try and penetrate that market. But this just brings everything under Plug Power under itself. So every single thing for Plug is now in their network. They produce the hydrogen, they can liquefy hydrogen, they transport the hydrogen, and they have the fuel cell to allow the hydrogen to start working so they can put it in cars and things. So they just have everything under one roof, and it's looking pretty good for them. We're going to look for their network to really take off. We're going to see how it starts in this year with their earnings reports, seeing how the plants they built last year should be working this year, and seeing how they're producing, if they're profitable, their revenue, everything that's going on. And then on top of that, we get more building of the network. This is long-term plans from Plug. So it's good to see a company looking long-term, not looking to, try and appease short-term, looking to be a giant company in the future and looking towards what that looks like. And then finally, their expectations here kind of for what their hydrogen liquefier is going to look like. And they have expectations to commission hydrogen liquefier trains with 15-ton per day and 30-ton per day capacities starting in 2023, so next year. And then you fast forward a bit down the line, and their growing national network of hydrogen plants will supply 500 tons per day of liquid green hydrogen by 2025 and 1,000 tons globally by 2028. This is the long-term stuff coming from Plug, that they are going to grow into the massive hydrogen energy provider and an energy giant in that case. So if hydrogen can take off and the market, even if hydrogen grows as a market, that means Plug is going to grow alongside with it. They have the first movers advantage, and they have the entire networks under them to do it all themselves, all in-house, where other companies don't have that. So it's going to be good to see Plug work all this stuff out, see if they can start really pumping hydrogen out. We'll see this year how their plants are actually doing, and we'll look at their revenue to make sure that they're on pace, they're doing well, and continuing to grow that. And finally, with these acquisitions, bringing everything under their own network, all at home, they'll be able to do every single step of the process themselves. So they'll just have complete control over how things are working, and they will have the market majority share of the entire hydrogen market. So it's looking pretty good for Plug long term. I'm excited to see how they get all this off the ground, excited to see them grow and continue pushing forward and innovating as a company. But that's going to do it for this video. As always, don't forget to smash the like button and subscribe. We're on the road to 1,000 subscribers. See you guys in my next video.